Are there signs that China's economy is turning a corner? The International Monetary Fund has raised its growth forecast for 2023, citing a stronger than expected third quarter and policy support from Beijing.
The world's second largest economy is now expected to grow 5.4% this year, driven by a post-COVID rebound in domestic demand. However, the IMF warns that property market volatility and weaker external demand is likely to cut growth to around 4.6% in 2024. Meanwhile, new figures revealed a surprise jump in the amount of goods entering China last month. Imports up 3%, with goods from Europe leading the way, but exports fell more than 6%, nearly double the size of the drop the analysts were predicting.
Speaking at a financial summit in Hong Kong, the Deputy Governor of China's central bank expressed his confidence in the Chinese economy.
Global investors have some concerns about Chinese economy, including the pace of economic recovery, problems with property markets, and local government debt. You may ask me, are you worried? No, not always, not too much.
Let's talk to Manish Singh, Chief Investment Officer for the investment advisory group Crossbridge Capital. Manish, good to see you. So exports down, imports up. Both sets of figures seem to have taken the forecasters rather by surprise. What's your take on this?
So if you look at the exports down, I don't think that should be a surprise to China as such, because what it also tells you that there's slowdown happening in the US and European economy. And China can do nothing about it if the US and European economies are not growing. And the encouraging number, as you know, has come from import side, which also signifies that domestic consumption or the domestic economy is rather strong. So I don't see this as a concern. I see more a warning sign for the global economy and for the Fed and other central banks that they need to get their rates lower because the growth in the Western world is slowing down.
The International Monetary Fund raised its GDP forecast for the year, crediting Beijing policy announcements for a rather rosier outlook. But the IMF also seeing growth slowing next year. What levers could Beijing pull to try to boost that forecast?
So as you look at the clip that you played just now, the CSRC and the policymakers are aware about the slowdown. I think what they also have to do, that they have to match the rhetoric with some increased liquidity measures, and which has not been the case so far. It has been very measured. We have heard announcement around banning of IPOs and other things that doesn't suck out liquidity from the secondary market. That may not be enough, because if we are looking at slowdown in the global economy, then that will definitely eventually come down to China as well. And before we know, we'll be talking about disinflation and deflation globally. So to deal with that, you have to increase liquidity, and the support has to come from the central government, not by way of just talk, but also by way of actions.
Despite the overall decline in exports, China saw a rise in imports from the European Union and from the Association of Southeast Asian Countries. Who'd have thought, given all the geopolitical tension? Business is booming along, isn't it?
That's true. And if you look at the composition of the exports and imports, you have still seen in export terms, the export of steel has risen. And why has it risen? Because a lot of that is going to ASEAN nations, I believe, from what we are seeing. And in terms of import, you have seen imports of energy products, which clearly says that domestic demand is high. So the one other factor that one should look at is outbound investment. I have said this in some of the panels I have been at, that the world has known China as exporter of goods. The world is about to find out China as exporter of capital. But those capital is not going to be exported to US and Europe for geopolitical reasons. Those are being exported into ASEAN nations and Asia, where the next phase of growth is going to happen, and China will be beneficiary of that.
There are a few clouds to discuss. China's local government debt reaching significant levels, perhaps posing a challenge to sustainable growth that you talk about. I mean, that's still a problem, and it doesn't go away, does it?
No, I think that is a problem, and that can become a problem if your growth doesn't match up. So all China has to do is to have more domestic consumption and domestic growth. And I would think that China is at a pivotal moment. If they're not able to export more outside, and if the local consumption increases, you will have a boom in the service economy in China. Because that's what you have seen in other parts of the world, where if you can't export a lot, then your consumption and domestic economy has to grow. And that's certainly in the UK. Look at how big the services is as a percent of GDP, and in the US. So that is the next phase China has to get into.
Manish, good to see you. Manish Singh from Crossbridge Capital in London.